Ladies and gentlemen, good day and welcome to the Mankind Pharma Q3 and 9 months FY25 results conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Agarwal from Mankind Pharma Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Thank you for joining us today for our Q3 and 9 months FY25 earnings conference call. On call today, we have Mr. Rajeev Juneja, our Vice Chairman and Managing Director, Mr. Sheetal Arora, Chief Executive Officer and Whole-Time Director, Dr. Sanjay Kaul, Chief Marketing Officer, Mr. Ashutosh Dhawan, Chief Financial Officer, and Mr. Prakash Agarwal, President and Strategy. We will start with Mr. Rajeev Juneja providing an overview of Q3 FY25, followed by Mr. Sheetal Arora providing detailed insight into our business performance. Mr. Ashutosh Dhawan will then take about our financial performance, and thereafter we'll open the floor for any questions. I would like to emphasize that this was the first quarter with BSV included in our performance, with 69 days of BSV effective from 23rd October 2024. Further, please note that some statements made today may be forward-looking, and for a complete disclaimer, please refer to the investor presentation and press release available on our website. Now, I'll hand it over to Rajeev, sir, for his comments.
Thank you, Abhishek, and good afternoon, everyone. Wish you a very happy new year, a very warm welcome to our Quarter 3 and 9 months earnings call. 2024 has been a transformative year for Mankind. We begin by assessing various M&A opportunities culminating in the acquisition of BSV, which perfectly complements our strategy of expanding into high entry barrier portfolios and having specialty R&D tech platform. Our market share in IPM in value terms increased by 40 bips to 4.8% in December 24 versus 4.4% in March 24, primarily driven by acquisition of BSV. And therefore, we raised funds of rupees 10,000 crore through NCDs and CPs for the acquisition. Additionally, we raised 3,000 crore rupees in equity, which has been utilized to repay a portion of CPs as of January 16, 2025, which shows our commitment towards maintaining a healthy financial position in the company. In line with the corrective actions taken in OTC division last year, we have undertaken certain corrective measures in our daily pharma divisions to enhance field force productivity and bring more efficiency in the system. We've always focused on building a solid foundation on which this initiative nearing completion, we are confident it will further support in delivering sustainable long-term growth. Moving ahead with our quarterly performance. In Quarter 3, 25, our revenue increased by 24% year-on-year to 3,030 crore and a healthy EBITDA margin of 27.7%. Our organic growth for the quarter was 11.2% year-on-year, with a domestic growth of 8.4% year-on-year, and export growth of 43% year-on-year. For 9 months 25, our revenue increased by 17% year-on-year, with adjusted EBITDA margin of 26.8%. Our organic growth for 9 months 25 was 12.3% year-on-year, with a domestic growth of 9.3% year-on-year, and export growth of 53% year-on-year. For Mankind, excluding BSV, chronic share has further increased by 200 bips year-on-year to 37.6% in quarter 3 25 as compared to 35.6% in quarter 3 24, driven by continued outperformance in key chronic therapies. Our commitment to make quality healthcare accessible to all has led us to expand our DMF grade products offering to over 215 versus 150. 215 versus 150 in financial year 24, with more than 90% of them in chronic segment, and thereby ensuring that our customers on prolonged medication receive products that adhere to international grade quality standards. Our corrective measures undertaken in OTC business is now completed, and we witnessed a robust revenue growth of 30% year-on-year during the quarter and 15% year-on-year in 9 months 25. On the R&D front, we continue to prioritize products innovation and building strategic partnership with innovators to strengthen our product portfolios. In this regard, we have recently partnered with Innovent Biologics for the in-license of Cintinibab, an advanced PD-1 immunotherapy designed to address the critical challenges of cancer treatment and improve access to innovative therapies in India. Overall, this year has been a transformative year for Mankind with 4 engines of growth. Number 1, steady base business. Number 2, fast-growing specialty chronic segment. And number 3, high potential OTC business. And 4, high entry barrier super specialty portfolio of BSV. All 4 business verticals are placed well to drive long-term sustainable growth. And now I invite Sheetal to provide more details on our business performance.
A very good afternoon to all. Thanks for joining us today for our quarter 3 and 9-month financial year 25 earning call. In the last quarter, we completed the acquisition of BSV, strengthening our high entry barrier portfolio and adding incremental capabilities to our existing R&D tech platform. During the quarter, work on BSV integration in Mankind is on track. Looking ahead, our priority is the successful integration of BSV to ensure long-term sustainable growth. Before moving ahead to the quarterly update, I would like to express gratitude for the overwhelming response we received during the fundraising, and I would also like to extend my heartfelt gratitude to all stakeholders for their continued trust and belief in our vision. Talking about domestic business, in the third quarter of the financial year 2025, our domestic business revenue increased 16% year-on-year, majorly driven by continued outperformance in chronic segments and consolidation with BSV business from October 23rd, 2024 onwards. Our organic domestic growth for quarter 3 financial year 25 was 8.4% year-on-year. For 9 months financial year 25, the revenue increased to rupees 8,203 crore, registering a growth of 12% year-on-year. Our organic domestic growth for 9 months financial year 25 was 9.3% year-on-year. In quarter 3 financial year 25, Mankind, excluding BSV, chronic share increased by 200 basis points year-over-year to 37.6%, primarily driven by 1.3 times outperformance in cardiac and 1.1 times in anti-diabetes. Now, our CVM cardio rank has improved from 4th to 3rd in IPM. As we know, cancer cases continue to rise in India, with its burden projected to reach 29.8 million disability-adjusted life years by 2025, we have recently partnered with Innovent Biological through an exclusive in-license agreement, Sintilimab injection. This strategic collaboration aims to address the critical challenges in cancer treatment. Talking about OTC, this has been the first quarter of the OTC business post carving out the same into wholly owned subsidiary of Mankind to maximize its true potential. In Q3 financial year 25, revenue increased by 30% to rupees 193 crore. The revenue for 9-month financial year 2025 increased by 15% to rupees 631 crore. The growth is largely attributed to healthy performance across key brands. Talking about international business, in Q3 financial year 25, revenue increased by 121% year-on-year to rupees 457 crore. In Q3 financial year 25, led by increase in our base business, further supported by BSV international portfolio. Our organic export growth for Q3 financial year 25 was 43% year-on-year. Together with BSV, we aspire to be one of the most admired companies in the country, offering complex and specialty products accessible to all. Now I invite Ashutosh ji to provide a detailed insight into the financial performance. Thank you so much.
Sure. Thank you, Sheetal ji. Good afternoon, everyone. I'm delighted to have you all on our Q3 9 months FY25 earnings call with us. This marks the first quarter in which we have started consolidation of BSV's financials effective 23rd October 24 onwards, along with OTC business which has been carved out of Mankind into a wholly owned subsidiary from this quarter. Let me briefly summarize the financial highlights of our quarterly performance for Q3 FY25. During the quarter, our revenue from operations has increased by 23.9% year-on-year basis to rupees 3,230 crores as compared to rupees 2,607 crores in Q3 FY24. This quarter's revenue is combination of Mankind's revenue for the full quarter and BSV's revenue for part of the quarter. During this quarter, our EBITDA has increased by 36.4% year-on-year basis to rupees 833 crores with margins of 25.8% as compared to rupees 611 crores with margin of 23.4% in Q3 FY24. The EBITDA margin for 9 months FY25 were at 25.8%. However, if we adjust the EBITDA with non-recurring expenses, especially related to the transaction, our adjusted EBITDA margins for the quarter were at 27.7%. The increase in adjusted EBITDA margin of 430 basis point year-on-year was largely due to improvement in the gross margin of 270 basis point, and the balance is on account of operating leverage due to higher growth. In 9 months FY25, adjusted EBITDA margins were at 26.9%. For this quarter, our gross margins have increased to 71% year-on-year basis from 68.3% in Q3 FY24. This increase is combination of sale price increase effect, favorable sales mix, and input cost. The R&D expenses for the quarter are rupees 71 crores, which remains at 2.2% of the sales, which is within the stated guidance of 2% to 2.5%. Depreciation and amortization expenses increased to rupees 192 crores as compared to rupees 110 crores in Q3 FY24. This includes amortization impact of rupees 84 crores pursuant to provisional purchase price analysis related to BSV assets. The consolidated effective tax rate for 9 months FY25 was at 21.2%, which is higher than 19.8% effective tax rate in 9 months FY24, which is in line with our guidance of 21% to 22%. The PAT has decreased by 16.4% to rupees 385 crores during the quarter, in spite of increase in the reported margins of 240 basis points. This is primarily due to higher finance cost and amortization costs related to acquisitions. Our diluted EPS is rupees 9.4 per share of rupee 1 paid for the quarter. The cash EPS, which is EPS adjusted for non-cash items like depreciation and amortization, was at rupees 14.2. The net operating working capital days for the quarter has increased to 52 days as compared to 45 days in the preceding quarter. Further, in 9 months FY25, our cash flow generated from operations was at rupees 1,599 crores, which is on an year-on-year basis a decrease of 2.3% from 9 months FY24. This decrease is on account of higher working capital days and certain one-off expenses. As a result of higher working capital and one-off expenses, our cash flow to EBITDA ratio for 9 months FY25 is at 67.4%. Our capex spend for 9 months FY25 was rupees 344 crores, which is 3.7% of total revenue for 9 months FY25, and the same is in line with our guidance of 4 to 5% of the revenue. In order to maintain financial discipline and healthy leverage ratio, we have repaid 3,000 crore of CP last week from the proceeds received from QIP. Our net debt to adjusted EBITDA is 2.2x as on quarter end, and our endeavor is to achieve net debt to adjusted EBITDA of 2x by end of this year. This concludes our opening remarks, and now we are happy to take any questions which you might have. Thank you. Over to you, Abhishek.
Thank you. We can start the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
So can we begin, please?
The first question comes from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Sir, with respect to the prescription business, we have commented that there has been corrective measures as far as MR efficiency is concerned. If you could elaborate, what was the lacuna or the loopholes which we have tried to, address and subsequently improve the MR efficiency. That's my first question.
See, if you just look over commentary, time and again, we have said that we want to attain a leadership position. And when you think of these things, you basically work on certain areas of your weakness, whether it is marketing side or IT side or finance side, every place. So let me talk about the marketing side. There were certain inefficiencies in terms of a bit primary sales or discounted sale, the category of doctors coverage, or the strategy of entering in top doctors' chamber, top hospitals. And once you start working on these things, which we started working last year, to bring these changes in 15,000 people, you need to take certain bold steps. And we have always been very, very forthright and frank in explaining that for the strong foundations, we'll always go for any kind of changes which are basically right for the future sustainable growth of mankind. And we have taken that. A lot of changes have been brought in leadership side as well. I mean, a lot of new leaders have come from outside, those who can really bring these changes. That is what has been done. When you do these things, this kind of bumps can really come. But let me tell you one thing, that we are very confident that that going forward things will be even better what was there in the past. 80-90% changes are complete, maybe next one quarter, this quarter, I'll say. In Mankind side, Pharma Delhi side, this will be complete. Let me further explain you what basically, with the example of OTC business. We took the same kind of steps last year in OTC side, where we just accepted that these are certain practices which needs to be corrected, whether it was number of distributors, whether hiving off, bringing a different talent, making sure that it's not a mixed kind of a culture where one guy, one leader is taking care of OTC and Pharma both. And once we took that, look at the growth, and what gives us more happiness is when we are solid from inside. And I can tell you with fullest confidence, the Mankind will always operate on these lines. I'm sure, I answered you.
No, that's quite comforting, sir. So secondly, while you have highlighted on the organic revenue growth, would it be possible to share organic EBITDA growth as well for the quarter?
So it will, since this is the first year and the numbers are strictly not comparable because BSV has been consolidated for the first time. And moreover, there has been one-off expenses also which has impacted the overall EBITDA margin. So going forward, we shall be in a better position to give a better color around this.
But let me add one thing. Once you take corrective actions, margins always improve. That I can tell you.
Yeah.
Margin will always improve. On one side, you will see that there's a less of growth. You can ask these questions. We know this. But once you take these corrective actions on a field force of 15,000, you bring a lot of new replacement, you challenge them, you push back, you do everything possible, right? And we have done it. And it's a long process. Even in Mankind, 1 year it has taken, where we take everything very, very fast. For any other company, it is quite a huge task. For any company, just to maintain everything, having a balanced approach, these actions can be taken in a tapered manner. But we believe that once we identify something, we work on that. So growth may be a bit affected, but naturally, the impact on margin increase is always there.
And it has been constant. Last quarter also 27. Yeah.
No, in fact, it seems that if I adjust the one-time expense with respect to the acquisition, at 27.7% margin, just trying to understand out of this, if I, on a like-to-like comparison, if I have to do for the base business, what is the EBITDA growth? So basically excluding BSV as well as excluding the one-time expense associated with M&A.
So, Tushar, so BSV margins are in line with company average margins. So the growth, the core growth in the EBITDA you see is as per what you see, because even if you strip that, you will get the same number.
Understood. That's it. That's it from my side. Thank you.
Thank you. The next question is from the line of Kunal Dhamesha with Macquarie. Please go ahead. Kunal, your line has been unmuted. May I request you to go ahead with the question,
Hello?
please?
Yeah, can you hear me?
We can hear you. A bit loud.
Yeah, sure. Thank you for the opportunity. So first one, more clarity on the organic growth. So what I've been saying is Q3 organic growth for our domestic business is around 11.2%, right? Is that correct understanding?
So let us repeat that. So our overall growth organic is 11.2, domestic is 8.4, and international export is 43%. These are the organic numbers.
Okay. So in that case, our formulation business would have grown at what, around 7%, 6%?
You mean the domestic ex OTC?
Ex-OTC. Yeah.
Yeah, that's around 7%. That's right.
Okay. So what, this is obviously, meaningful from what we have been seeing. While our chronic has improved, our acute seems to be bleeding in my view. So what are the steps that we have taken, and what is the outlook on the acute therapy, since it's still, while we are growing our chronic, acute is still the bigger part of the chunk, right? So how should we think about the organic domestic formulation business going forward?
I know, as Rajeev highlighted, there is significant corrective action taken in the Delhi division, which is largely the mass market division where acute sits. So there, significant corrective action in terms of field force optimization, productivity improvement, efficiency improvement is taking place. So that's why you see acute being sharper drop across acute therapies, not only one. So that is the main reason. And while you see that there is some impact on chronic, I would also say that we usually grow 1.3x. This time it's been 1.1x. But that journey continues because of the higher focus. And your observation is totally right that acute is softer because of these corrective measures, which Rajeev ji already highlighted in just before this.
Let me elaborate even further, Kunal, to your query. So whenever you take corrective actions, right, corrective actions in terms of everything, and once we identify in Mankind especially that these are certain things to be cleaned up, corrected, then we move very fast, irrespective of anything, because our concern is always the foundation, the strength, the substance of Mankind, because that drives the organization. So we worked on that, and lot of changes we brought in our leadership as well, whether in the field, whether at head office, in marketing, every place. And once you do all these things in a field force of, again I repeat, 15,000 plus people, it takes time. We started this process last year, I'll say March. So 80-90% is done. You take up every division, every zone, every area, scrutinize that, check it, which ZM, which RM, which sales manager, which marketing manager, which person, which BU head, and then we take action. And we have taken that. The kind of actions we have taken, I can tell you, you'll find rare company taking these things, because there is always some kind of a burden on those people of showing off a performance which is actually not there inside. In our case, because we are promoters, so we can say, our foundations are more important than us, than anything else. So we have taken this.
And so there is one more fact that we have to take into consideration. There have been regulatory tailwinds regarding emergency contraceptive pill, an anti-infective, a combination that is an FDC, and codeine preparation that also has impacted the growth in Q3 of acute segment.
So can we quantify that impact, all these three put together?
So
it's about 0.5%.
Okay, 5%. Okay. And one question on the BSV. So if I look at the BSV revenue, probably it's around 330 crore, including domestic and export. And if I add it to the first half performance, we would be close to around 1170 crores, which is roughly, let's say, 68% of the last full year revenue. So is there any seasonality that is playing out, and quarter four could be very strong, that could add 1/3 more revenue, or is there a slowdown on BSV aspect as well?
So Kunal, this is for 69 days. So first point is you have to quarterize it. Take it for 90 days, 91 days.
Mm-hmm.
That's the first point. Second,
Yeah.
there is a significant restructuring going in the RX business, that it is the TTK business of the BSV. Because we understand RX business better, so that is getting shifted to Mankind. So there is a lot of field force optimization that is happening there. As we also said, there were 600 people in a very small division. So we are looking at optimization, we are looking at product portfolio rationalization and optimization there also. So various initiatives are going. We want to improve the hygiene of the business. So RX business has been soft. Other than that, I think the other businesses are going very well. So these are the two key reasons.
And then how should we think, let's say 2 years out, what's the internal expectation for the BSV business growth, specifically for domestic as well as export?
So overall, we continue to maintain that this is a high entry barrier portfolio, and growing 15% plus should be possible with export being higher. And on the margin side, we continue to maintain that this is, given its high entry barrier portfolio, margins to start with should be in the region of the company average, 26 to 28%. And thereon, taking initiatives, R&D initiatives, productivity initiatives, we look forward that in 2 years' time, we should every year add on a little bit on the margin side as well.
Sure, sir. Thank you, and I'll join back the queue.
Thank you. The next question is from the line of Neha Manpuria with Bank of America. Please go ahead.
Yeah, thanks for taking my question. Just, continuing on the corrective actions that we have taken, has these corrective actions led to a reduction in the field force that Mankind had? Just trying to understand, what essentially, and has this led to lower spending in the quarter? If you could give us a little more color on, what essentially is there. I understand the opening remarks that you made, but just trying to quantify this.
But let me tell you, Mankind is known for its reach. We'll always maintain that. So what happens, there's certain customers which are very, very relevant. They were relevant 10 years back, but maybe today they are not relevant. The practices changes, acute to chronic. Some people age, right? So you need to change list of your customers as well, right? And that when you do that, you want to penetrate in the hospitals and clinics of those doctors, those who are a bit high-end. Keeping that in mind, these corrective actions have been taken, whether it's a talent, training, primary sales, discounted sales, coverage of doctors, everything, right? We have not cut down number of people, we have replaced people. Especially in leadership side, I will say. Because once you replace leadership, some people also leave with those people. Naturally, when you say this is a new Mankind, this Mankind wants to become number one company in future. When you announce these things, it's not for the sake of announcement only. It's really to walk the talk. So you take these hard actions, we have taken that. So we have not cut down number of people, and whatever, less number of people would be visible, they would be visible and they will be filled. We are in lookout. You keep seeing vacancies, we keep filling it. It's not like that. The strength of Mankind would remain intact, reaching. Just give you an example of that. Every year, how many thousands of doctors come out of medical colleges? So that coverage has to be there, right? How many doctors, customers become lose practice. You check the list, you find a lot of lacunas. Once you go deeper down, once in a while, and we went last year, and when we basically started seeing the taste of chronic sales benefits. Once we launched our this specialty divisions in Mumbai side, we saw that what can really happen. So naturally, our inclination went towards that side. And once you go for that, you say, further deep down, why our existing divisions were not covering these doctors? Let's check it out. And once you go for a deep checking, you realize these are certain lacunas, and you work on those. And same, I again want to reiterate that we started this journey last year, March. This is almost 1 year. And this quarter, I can tell you, till now, 80-90% job has been done and dusted.
Understood, sir. Ashutosh sir, is it fair to assume that the organic SG&A cost would have declined materially quarter on quarter because of these corrective actions?
Yeah, there has been some. If you see on a consolidated basis, so there is a delta of 50 crore, and if you see the one-off expenses, that's around 63 crores. So it is fairly flat, slight decline in the SG&A cost on a quarter-on-quarter basis.
So I want to add one point, Ashutosh ji. In March 31st, 2024, we had a field strength of 16,043. In December 31st, 2024, we have a field strength of 16,570. We have rather added more people.
Understood.
But some expenses have been rationalized on a quarter basis.
Excluding BSV, that is.
This is excluding BSV.
Okay, understood. And my last question, when I think about the synergies that we can get from the BSV integration, what I think Prakash mentioned, what are the milestones that we need to watch? I mean, would it be procurement first? Portfolio optimization probably takes time, field force optimization. So what are the milestones that we need to watch for to understand the synergies that you could get? And if you could quantify a synergy, let's say, over the next 2 years or 3 years that you're targeting.
So, thanks, Neha, for your question. So we continue to maintain that about 50 to 100 crore synergy benefits will be there over the next 12 to 24 months, primarily led by 3-4 things. So one is BSV's MR productivity, both RX and non-RX. So there's a lot of room. As we said, fertility is still 18 lakhs. We see peers around 30 lakhs. So that is one clear area. Then we are looking at shifting of outsourcing of RX portfolio to Mankind itself, because we have large facilities and tablets and the capsules we understand better in terms of manufacturing. So the RX business, if it shifts, we see cost savings there as well. Plus, we see a lot of, we have ourselves a large gynac division. So we get access to those fertility clinics because fertility clinics are growing very well. So there's a lot of cross-selling opportunity that we see. Plus, there's a host of extensive geographical doctor coverage that both the companies can, gain from each other, leveraging the extensive coverage. And lastly, there are some of the savings that can come from leveraging resources because, there might be some optimization that can be played out in future.
Okay, that's helpful.
So these are the 4 or 5 points, yeah?
Yeah, thanks.
Thank you. The next question is from the line of Rashmi Shetty with Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. In the anti-infective segment, in the presentation also we have mentioned that we have underperformed the market, and you already mentioned that, certain corrective actions had been taken. But in that, related to the product, you mentioned that, the codeine-based, we have also lost sales in the codeine-based product. But what I understand that the Codistar has already started picking up very well, and it is already, getting around 80 to 90% of the codeine-based sales. So, what is exactly leading to say that, this product-related issue is still there?
So, thank you so much for your query, Rashmi. There has been one product which has faced a regulatory issue. It is a FDC which it got impacted in Q3. So that is why it has also an impact. It has impacted the overall growth of anti-infectives. This is one. Second, when you make overall corrections in field force over a period of 9 months, so we are talking about good number of field force, and we have replaced the field force, but many colleagues in field are 3 months old, 1 month old, 4 months old, 6 months old. They will take some time to basically develop a relationship and rapport with the customers, and things will improve in coming quarters and months.
So for this full year, taking into account that anti-infective will be slowing down, do you think that, we would be just showing organic, only Mankind's domestic formulation growth will be, high single digit sort of?
So, Rashmi, this is Q3 only where we have shown less than optimum performance of anti-infective. But if you look at the YTD, then we are almost equal to IPM growth, 5% versus 6%. So it's not way behind the IPM growth. And this will also be corrected in case I take into consideration the FDC which we had to withdraw because of regulatory issues.
Understood. And how is your Panacea portfolio performing?
So
Very good.
Very good.
It is still showing at around 20% sort of growth?
Correct. Our transplant business is showing 20% growth, and the other products which we promote in other divisions are growing by more than 25%. One is Sitcom and second is Pylorute.
Second one is?
Pylorute.
Glizid.
Glizid.
Okay. Glizid. And out of your total purchase consideration, what is the split between intangibles and goodwill? Is it 70-30 only what you earlier mentioned? And how many years amortization you have taken in?
So if you look at the plain split, so that is 2/3 is towards the intangible and balance is towards the goodwill, broadly speaking. Okay. So if you look at the depreciable intangible assets, so that is around 9,000 crore out of the total consideration approximately. However, if you adjust it for taxes, it becomes 7,200 and the balance gets allocated towards the goodwill. So that's how the broad part is. And if you look at the overall life of the useful life of these assets, so that ranges from 5 year to 30 year. But on an average, weighted average basis, it's around 21 to 22 years.
21 to 22 years. Okay.
Yeah.
And one final question: what is the cost of debt for the portion which is still there sitting in the balance sheet after 3,000 crore repayment? The average cost of debt.
Okay. Yeah.
So Rashmi, it's sub 8%, and if you see the 3,000 crore which we have repaid, that was close to 7.5%. But all the debts, which is 2,000 crore of CP and 5,000 crore of NCD, it's in the range of 7.9 to 8%. It's there in the public domain along with interest repayments.
Okay.
So
Thank you so
said
much.
that, just to clarify, Rashmi, further from where there is a bulge in the interest expenses in this quarter, and this is towards expensive of some of the debt arrangement fee and other related expenses.
Yeah, that's the reason I asked, because I just felt that the interest cost during the quarter was extremely high, because when you adjust 7.9 to 8%, the interest cost should have been lower. But fine, I just got the clarification. Thank you. That's it from my side.
Okay.
Next one, please.
Yes, thank you. The next question is from the line of Chintan Sheth with Girik Capital. Please go ahead.
Thank you, team, for the opportunity. The question I had was on the interest cost only. So you clarified that there were certain costs related to debt raise was also sitting in the interest cost. If you can quantify the same, would be great.
Okay.
Because
so if you see
that will be non-recurring, right?
No, that is not, because CP is getting retired and all those. So if you see the total expenses around 220 CR, and historically, if you see on a quarterly basis, 10 to 12 crore is always the interest expense which is coming, because there are certain loans in the subsidiary. And and we can give you color for the next quarter, the interest cost would be in the range of 180 odd CR or so.
Okay. Next quarter, still on a 7,000 crore of debt.
On a 7,000, yeah.
Gross debt.
Because CPs we have retired on 16th of Jan, so there will be a spillover effect also.
For 15 days. Okay.
Yeah, 16.
Okay.
Yeah.
Right. Okay. And on the corrective measures which you have taken for last 1 year on the prescription side, do you feel the hit which we have seen this quarter, where the growth has compromised, for 4Q there will be some more spillovers likely to happen, and then next year onwards we'll have a fresh growth slate to grow from there on?
Yes, I mean, see, whatever actions we have taken to ensure that In future, we are much better, stronger, right, and actual, right? So I again reiterate, 80-90% things have been done. Whatever is left, 10-15% would be done now. It is in motion, process is on. So 80-90% we say it has been done, completed.
Mm-hmm. Okay. And the regulatory restrictions, the product which led to acute getting impacted, the gynec getting impacted, one or two products which you mentioned. Are we trying to recoup, or we try to change the prescription so that we can reintroduce the product in the market to get the sales recovering back?
So in gynecology, there was DPCO matter, so that we can only increase the volume growth, but it will still take quite some time to reach to the same number, because there has been steep decline in the value growth because of the DPCO. And second product, it's an anti-infective FDC, and we have already maybe in a month's time we will be introducing a replacement of that FDC, a single molecule, so that we can mitigate the losses because of the dent that we get in anti-infective because of that anti-infective FDC.
Let me elaborate on that. I mean, certain things keep happening. I mean, certain kind of headwinds are always there. If you're solid inside and you basically keep launching new products, ensuring that your 50 crore rupees brand becomes 100, you have certain strategies, right strategies, and you are entering and meeting right kind of customers. These things get mitigated automatically. I mean, they are not, worth giving so much of focus. It happened. I mean, now, look forward and change the picture. We take everything like this.
And lastly, on the BSV margins, you mentioned that it is closer to the average adjusted EBITDA margin which we have kind of clocked. Going forward, we also mentioned that BSV has a potential to improve margins to about 30% level, given the product being a high entry barrier and specialty in nature. We can scale that business faster with our reach and drive the margins upward of 30%. That is our goal. The synergy you mentioned around 50 to 100 crore is part of it, or that is a separate BSV targeted margins to improve from here on.
Yeah, so over 2 to 3 years, we expect that there should be improvement in the margins by 100 bips every year, while it will require some R&D investments also, because enter into some of these semi-regulated markets, regulated markets will require investments. But we remain on track that in next 2 to 3 years, we would be close to 30% margins, and for sure in the next 5 years.
Correct.
Synergies are baked in this.
Yeah, synergies are baked in, yes.
Synergies are over and about it, right? Yes. Okay.
No, baked in.
Thank you.
Part of this, yeah.
Okay. Thank you, and I'll join back in.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Amalan Das from Nomura. Please go ahead.
Yes. Hi, sir. Most of my questions have been answered. I just wanted to ask one question. In the organic domestic formulation growth, what has been the contribution of volume, price, and new products?
Yeah, so if you look at the quarter, there has been a slight decline in the volume because of those corrective actions. So it's about -1%. And price growth is about 3%, and NI new introduction is about 3%. So this is as per secondary data, IQVIA, 5% growth is what we have got from IQVIA.
But if you look at YTD, then volume growth is around 1%, 4.4 is price growth, and 2.6 is new introduction growth.
And just wanted some clarification. I think I missed a part. So these corrective measures, they should be continuing in the next quarter, right?
This quarter.
Corrective measures.
This quarter, again, 80-90% job has been done. But 10-15%, it's always a work in progress, will be completed within this quarter only.
Sir, is it possible to quantify the impact of these corrective measures on the growth? What has been the impact?
So quantification is not possible, but you can see, if when you take these actions, so your growth is not great. You're not happy with the growth. Number one. Number second, but the best part basically is what EBITDA margins are increased. The happiness is what that you have you see the company in the right direction. New young leadership enthusiasm has been infused. So every company once in a while needs some kind of changes which we have brought.
And regarding the quantification, regarding the quantification, if you can see that the history of Mankind, we have always grown 1.1 to 1.2 times better than the IPM. So this time our growth is subdued. That's the way I would.
What I wanted to understand is that the negative volume growth that you have seen this quarter, is it majorly because of the corrective actions, or is it also a bit possible?
Sir, may I request you to use your handset, please, sir? Your audio is breaking, sir.
Can you hear me now? Sorry.
Yes, sir. Please go ahead.
Yeah, I just wanted to clarify that the volume growth, negative volume growth that you have seen in this quarter, is it majorly because of the corrective measures, or there is also a market phenomena here that actually the volumes have been decreasing of the products?
Mainly because of corrective action.
Okay, sir. Thank you. That answers my questions.
Thank you. The next question is from the line of Kunal Randeria with Axis Capital. Please go ahead.
Yeah, good afternoon, sir. So just to clarify on the BSV business, from what I understand, this year the BSV business revenue should be flat. Would that be correct? And that's largely because of some changes in the employee structure that you are doing there.
So if we exclude the RX business, the business has grown double digit. RX business is one more quarter. There is a restructuring going on. The business is getting shifted to Mankind. So going forward, I think fiscal 26, when you see, you'll probably see all the businesses X of RX. And the specialty business, which is women's specialty as well as the international specialty, both are going double digits. So it's the RX business, and there's a small element on the API side that, barring that, business is in good shape.
Fair enough, but at the console BSV level, it would be flat this year, right?
Console level, yes, one can say so. And this is strategic to improve the hygiene and the quality and productivity.
Got it. That's very clear. Second, on the export front, you've had a great last few quarters. Last year, you used to call out that it was driven by some of these one-time opportunities. But there's been quite healthy growth even from those levels. So can you just give us some color on how much of this export portfolio you still classify as limited competition?
The last part was not clear, sorry.
So I was asking that you have still grown from last year's level when a lot of the business last year was driven by one-off opportunities, as you yourself called out. So in today's revenue generation, how much of the portfolio would you classify as limited competition?
No. So if you see, we have given some data on the new launches as well as approvals. So now the base business is growing pretty well, both in the US and ROW. Excluding that one-off also, the business is growing, and the share of that one-off has come down substantially. Despite that, there is a decent growth happening.
Right. And the new launches of the base business that you speak of, the margins would be near the company average?
So that would depend. It's very difficult to quantify margins for the regulated markets. That is product specific.
Okay, sure. Thanks.
Thank you. The next question is from the line of Dheeresh Pathak with White Oak. Please go ahead.
Yeah, thank you. I hope I'm audible. This in the BSP 1723 crores revenue of FY24, how much was the RX business in that?
For the quarter and for the year, I mean, when we were acquiring, we had said it's about 11%-12%. For the quarters, we are not quantifying, but since the growth has come down, you can imagine the ratio would have come down substantially.
Okay. And this 1724, to the earlier question, Prakash, you said this will be flat in FY25, the total sales.
Flat means marginal growth. I mean, it would be single-digit growth, but yeah, I mean, because of these corrective actions, we think that, making solid foundation is more important, improving hygiene is more important. We are also taking some steps to align BSV to Mankind policy. So this is, I think, transient. So Q4 onwards, I think you will see the base restarting to grow.
Understood. And on the restructuring, so you mentioned senior leadership changes and MR restructuring. Apart from that, what else have you changed, sir?
See, I mean, once you bring different kind of leadership, different kind of policies in the sense that approach to market, see how to approach a chronic product, how to bring new products, how to make sure that your acute business is doing good. Plus, other changes are basically bringing some kind of automation, using more of IT side, using more of digital side, all sort of things. Because ultimately, if you bring a modern leader, he brings modern things, and things start changing.
Okay.
And making sure that hygiene is always there. Right hygiene is most important for us.
So I'm just trying to understand that, like in consumer business, there was a channel change. So there was a difference in the primary and the secondary sales. So in the prescription business, have you done, apart from the MR restructuring and senior leadership changes, have you done any channel policy changes? So there is a difference between primary and the secondary sales?
Yeah. In primary side, in discount side, in hospital extra discount side, in customers list side, going to those areas and those hospitals which was out of coverage, all sort of things.
So, but the final secondary sales at the customer end, do you have a measure of how much that would have grown? Because if you're showing primary at 7%, then how much is the channel impact? Is there an estimate of that in your mind?
I always believe that once you bring these kind of changes, sales and you maintain and make sure that hygiene is there, secondary is no less. Primary, secondary should be equal. I mean, how is it possible that it's prescription versus primary sales? Prescription is secondary and primary you fill. I mean, if you basically believe that you are in a solid ground, you always make sure that your secondary is more. The secondary prescription is very, very good. And based on that, you fill the inventory.
So maybe if you can give one or two examples of the senior leadership changes, so that we get some qualitative color of, what exactly you changed in the senior leadership.
No, I can add. So we have a lot of divisions. So if you see, we have more than 15 divisions, and in the large divisions where there was some rigor required, we have added some leadership change. That's one big change that has happened. So when these large divisions start growing double digit, you will probably see a good change next year.
Okay. All the best. Thank you for taking my question.
Thank you. We'll take the last question, please.
Yes, sir. The last question comes from the line of Abhinav Ganeshan with SBI Pension Funds. Please go ahead.
Thanks for taking my question. I just wanted to understand, if you can...
maybe request that you use your handset, sir. You're not audible.
Yeah. Is it better now?
Yes, sir.
Hello. Yeah. So just one, if you can, just one clarification I wanted on some qualitative color. So just wanted to understand on company-wide PCPM basis for your whole business and for the chronic segment, is the chronic PCPM starting to grow faster than overall PCPM? How do we look at that?
It's always like that. I mean, chronic was always growing faster. It was always like that. I mean, we just mentioned that now it has reached to 37 point some percent in our total sales, I mean, which is 200 bips more than last year. So our focus, once we understood that chronic is way forward, and for chronic you're supposed to approach those specialized doctors. So naturally, I mean, it's not approach. It's total change. Total ecosystem has to change in the sense who is going, what is supposed to talk, what kind of training should take place, everything.
So just to clarify, the growth is faster in chronic, but as an average, PCPM in acute will be higher because of the aging is much higher.
Yeah, I appreciate that color. So, okay, is it a safe assumption to make that in the next 5 to 6 years, as this chronic business also ages, we come towards the company average?
100%.
Yeah. Thank you so much.
That's the goal.
All the best. Got it. Appreciate the color. Thank you so much.
Thank you. That was the last question for today. I now hand the conference over to the management for closing comments.
Yes. Thank you. And please feel write to us in case you have any further clarification questions. Thank you. Have a nice day.
Thank you. On behalf of Mankind Pharma Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.